Do you still consider a bank a safe place to keep your money? What if I told you that it is exactly the opposite? What if the very place you trust to safeguard your money is actually working against your financial growth? Today, we unveil the startling truths behind why parking your savings in a bank might just be the worst financial decision you could make. From low interest rates to the risk of bank failure, we'll unpack each reason. Stay with us until the end, because you will also find out where it is most profitable to keep your money today, and moreover, safely grow it. But before we continue, don't forget to like this video, subscribe to our channel and turn on the notification bell to receive more valuable insights on achieving financial freedom and prosperity. Stay tuned as we delve into 5 reasons why keeping your money in the bank is not a good idea. Reason number 1. Low interest rates. Now let's dive into the world of low interest rates. When you deposit your hard-earned money in a bank, it's not just sitting there. The bank uses it to fund loans and generate profits. And in return, the bank pays you interest. Sounds fair, right? Well, not so fast. The problem lies in the fact that these interest rates are often dismally low. We're talking about rates that would make a snail seem like a sprinter. And while your money is slow dancing with these low rates, something else is happening behind the scenes. Inflation. That's right. The cost of goods and services is steadily rising, often at a rate that outpaces the interest you're earning. So what does this mean for your savings? Well, let's put it this way. Imagine you're running a race. But while you're jogging at a leisurely pace, the finish line is sprinting away from you. That's your money in the bank. The purchasing power of your savings is constantly being eroded by inflation. The money you've saved today will buy less tomorrow. And what's the result? Instead of your savings growing, they're effectively shrinking. Feel like you're losing the race? That's because, in a way, you are. So, with low interest rates, your money is actually shrinking in the bank, not growing. Reason number 2. Fees and penalties. Banks, in their quest to make a profit, are notorious for charging a variety of fees and penalties. Some of these might seem small and insignificant at first, but they can quickly add up, taking a significant bite out of your hard-earned savings. One of the most common types of fees you're likely to encounter is a monthly maintenance fee. This fee is often charged simply for having an account with the bank. It's like paying rent for your money to stay there. And while some banks may waive this fee if you maintain a certain minimum balance, not everyone can afford to keep that much money in their account at all times. Next, we have overdraft fees. If you accidentally spend more than what's in your account, the bank will cover the difference, but at a cost. Overdraft fees can be steep, and if you're not careful, they can lead to a downward spiral of debt. Then there's the penalty for not maintaining a minimum balance. Some banks require you to keep a certain amount of money in your account at all times. If your balance dips below this minimum, you could be hit with a hefty penalty. These fees and penalties, while they might seem like just a part of banking, can eat into your savings, leaving you with less than you started with. Reason number 3. Accessibility. Have you ever thought about how banks can limit your access to your own funds? Let's delve into that a bit. We all know that banks are not open 24 hours a day, 7 days a week. Sure, there are ATMs and online banking, but what if you need more than what they offer? Picture this. You're about to make a significant purchase or investment, and suddenly, you're hit with a withdrawal limit. That's right. Banks often restrict the amount of money you can take out in a single day. But wait, there's more. Ever deposited a large check, only to be told that you can't access the full amount immediately? Banks often place holds on large checks, sometimes for several business days. You might be thinking, but it's my money, why can't I use it when I want to? Well, that's a good question. Banks do this to ensure that the check is legitimate and the funds are available. But while they're verifying, you're left in a lurch, unable to utilize your own funds. This brings us to a crucial question. If you have to jump through hoops to access your own money, if there are limits on your withdrawals, and if your funds can be held hostage for days on end, is your money really yours when it's in the bank? Reason number 4. Risk of bank failure. Now this one might catch you off guard. After all, banks are supposed to be the epitome of financial stability, right? Well, not always. Banks can and do fail. In fact, during the Great Recession of 2008, more than 500 banks in the United States alone went under. Here's where it gets tricky. The Federal Deposit Insurance Corporation, or FDIC, provides a safety net by insuring deposits up to $250,000 per depositor per bank. But what if you have more than that amount stashed away in your bank? Beyond that $250,000 mark, your money is not insured and is at risk. Let's say hypothetically that you have $500,000 in a single bank and that bank collapses. You'd only be insured for $250,000. The rest, that's another $250,000, could be lost. And while bank failures are not everyday occurrences, they are not as rare as one might think. Since the year 2000, the FDIC has recorded over 500 bank failures in the United States, so as you can see, keeping large sums of money in a single bank carries its own set of risks. If your bank fails and you have more than $250,000, you could potentially lose a lot of money. Reason number 5, lack of investment opportunities. It's a fact of life, opportunities are everywhere, especially when it comes to growing your wealth. But here's the catch. When your money is sitting idly in the bank, it's not working for you. It's not seizing those opportunities, it's not tapping into the potential of the market, and it's certainly not maximizing your wealth. By keeping your money in the bank, you're essentially putting a cap on its growth potential. You're settling for the bare minimum when you could be aiming for the stars. Sure, investing comes with its own set of risks, but it also comes with the potential for substantial rewards. And with a calculated approach, guided by research, and perhaps some professional advice, these risks can be managed effectively. Imagine the difference between your money growing at a snail's pace in a savings account versus it multiplying in an investment that's been chosen wisely. It's like choosing between a slow stroll in the park versus a thrilling roller coaster ride. The latter might come with a few twists and turns, but the exhilaration of the ride and the view from the top makes it all worthwhile. By leaving your money in the bank, you're missing out on opportunities to grow your wealth. So, where should you keep your money instead, you ask? Great question. Let's explore some smarter, more rewarding alternatives. One of the most effective strategies is to invest your money in a diversified portfolio. This could include a mix of stocks, bonds, and real estate. Now you might be thinking that investing sounds risky, and it can be if you put all your eggs in one basket. But if you diversify, spreading your investments across different types of assets, you can significantly reduce your risk and increase the potential for return. Stocks offer the potential for high returns, especially over the long term. Bonds, while generally offering lower returns, provide a steady income stream and are typically less volatile. Real estate, on the other hand, can provide both income and appreciation. But remember, it's not all about investing. It's equally important to have an emergency fund tucked away. This should be enough to cover at least 3 to 6 months' worth of living expenses. And instead of storing it in a traditional bank account, consider a high-yield savings account. These accounts often offer much higher interest rates than standard savings accounts, helping your emergency fund grow. So there you have it. Don't let your money sit idle in a bank account. By investing wisely and saving strategically, you can truly make your money work for you. Take control of your financial future. Start exploring these alternatives today.